Can we do it? Yes, we can. Welcome back. We're going to talk about using multiple predetermined overhead rates to allocate cost to our jobs. Good news, if you're a little confused about using a predetermined overhead rate, you're going to get some practice right now, and we're going to do it twice instead of once, because using a multiple predetermined overhead rates gives us more accurate information, but it's the same exact process as using a single predetermined overhead rate. We just do it more than once. So more practice, the better. So let's do this. All right, so we've got Dixon Company has two production departments, milling and assembly. The company uses job order costing to compute their overhead rates. The predetermined overhead rate for milling is based on machine hours. Assembly is based on labor hours. That should kind of make sense. Milling's like drilling things and cutting things, so that's going to use machines, so makes sense it's based on machine hours. Assembly is putting stuff together, probably done by humans, so that's based on labor hours. Then the company uses cost plus pricing to give a markup of 75%. So once we get our job costs, we could figure out using the 75% markup how much we should charge our customers. So then we're given some information about the different departments, which we're going to use to calculate a predetermined overhead rate for each department. So the first thing we're going to need to do is figure out the predetermined overhead rate for the milling and assembly departments. So to do that, we're going to be using our formula Y equals F plus VX to figure out the overhead cost in each department. I have a bad memory, so I'm going to have to go back and forth in the slides. So for milling, the total fixed overhead is $390 and assembly is $500. So for milling, we've got $390,000 plus something, and for assembly, it's $500,000 plus something. Going back, we have our variable overhead rates of $2 and $375. So it'll be plus 2 for milling, plus, I told you I had a bad memory, I already forgot, $375 for assembly. Then we have to multiply by the appropriate driver. For milling, we're going to multiply by the machine hours, which are 60,000. And for assembly, we're going to have to use the direct labor hours, which is 80. So we're going to use 60 here for machine hours and 80 here for direct labor hours. Got to make sure we use the right driver, which means we got to make sure we know how to read the question carefully. That's the key. So we do our little math here. I think you get $120,000 plus $390,000. And then 390 plus 120 gives us 510 for milling. A little more math, 375 times 80 gives me 300,000. Then we add 500,000. And then we get 800,000 when we add that together. The next step is going to be to get our predetermined overhead rates for each department. Our predetermined overhead rate, remember, is estimated overhead over estimated activity. So you might want to pause the video and give it a go right now on your own, see if you can come up with the right answer. Welcome back. I know some of you didn't pause it, but that's okay. So to get the predetermined overhead rate for milling, it's going to be 510,000 divided by the driver, which is those machine hours, 60. And then it's going to be 800 for assembly divided by the direct labor hours, which are 80. That's going to give me a predetermined overhead rate of 510 divided by 60, or 850 per machine hour for milling. And then 10 per direct labor hour for assembly. Don't panic, my work is gone. That's intentional, because now I'm going to show you the typed version of everything we just did to make sure I did it right. And you can always rewind to see my glorious work. So here, the first step is getting the overhead for each department, milling and assembly, and lo and behold, that 510 and 800 seems really familiar. The next step is to get a predetermined overhead rate for each department. So we take those estimated overhead amounts divided by the estimated activity, and thank goodness we got $8.50 per machine hour and $10 per direct labor hour. So I seem to know what I'm doing. Now we have to allocate it. In order to allocate it, we need to know the actual machine hours and direct labor hours used for the job. We have job 407 here and some information. You have to remember the milling department uses machine hours. The assembly uses direct labor hours. So we can use that information to apply overhead. Remember, to apply overhead to our jobs, we're going to take our POHR times our actual activity. So our POHR for milling is going to be, I believe we figured out 850 times the 90 machine hours. And then for assembly, it's going to be $10 times the 20 direct labor hours. So remember, we're using different drivers for each department. So we do out some math, and we get 8.5 times 90, 765, and then we get 200. So we're applying overhead, 765 for milling, 200 for assembly. And like magic, my work disappeared again, and that's only to show you the typed answers here. And I believe 765 and 200 is what I calculated as well, which is good news. So now we know how much overhead we would apply to this job. It's the same as using one predetermined overhead rate, except we do the work twice. So then when we want to figure out the overall job costs, we're going to include the materials and labor costs from each department. And if we go back a slide, we could see the materials and labor costs for each department is given right here at the bottom. So those are given numbers. So we have those numbers again right here. And then we have our 765 and 200 overhead applied that we calculated. And then we add it all together to get our total job cost, which is $24.85. So it's really not too difficult. Practice makes perfect. And the benefit of doing predetermined overhead rates is you get to do the same thing over and over again, getting more and more practice. So remember, way back when we started this problem, it said that they include a 75% markup on their jobs. So to figure out the markup, we take our cost, which is that $24.85 we just calculated, and then we multiply it by that 75% markup to get a markup of $1863.75. We add that back to the original cost, and we get $43.48.75. I'm a big fan of shortcuts, so what I would have done is I would have taken the $24.85 cost and I would have multiplied by 100 or 100%, because you want to have at least the $24.85 plus a 75% or 0.75 markup. And I'm going to just double check with my calculator because I know you'll be checking on me and I want to make sure it works. And lo and behold, I get $43.48.75 all in one step. Now you do you, and you can do whatever you want in order to calculate it, but I think this is really the more efficient way to get the answer. By using this departmental approach, we're getting hopefully more accurate information when it comes to applying our overhead, which in turn means we get a more accurate job cost and therefore a more accurate selling price. Using a predetermined overhead rate for the company as a whole, that one-size-fits-all mentality is nice, but it isn't going to be as accurate, which may result in us potentially losing bids on different jobs because our price might turn out to be too much. Or we may win a lot of bids because we're really undercosting our product, and in the end of the day, we are going to lose money as a result. And we want to try to prevent that from happening. Whew, look at that transition. How exciting. So when we're using multiple predetermined overhead rates, it basically is similar to something we'll learn in Chapter 7, which is called activity-based costing. In activity-based costing, it's like using multiple predetermined overhead rates, except on steroids. So we basically figure out all the different activities that the business goes through in order to produce their product. We allocate overhead to all those different cost pools, and then we come up with a different overhead rate for each pool. So instead of having like 2 predetermined overhead rates, we end up having something like 5. Again, what's the benefit of doing an activity-based costing approach? Well, because the more cost pools we have, the better the relationship will be between the cost pool and the driver. And ultimately, that means the better our costing information will be at the end of the day. It's really not hard to do. I think you'll enjoy ABC costing if you can enjoy any accounting at all, because it's really just a bunch of math. Taking estimated overhead divided by estimated activity times the actual activity. You do that 4 times in a row, and boom, you got the answer.